Very good evening, everyone. Jeremy here, quantstrategic.com.sg. And wow, what a fantastic close to the SPX last week, all-time highs at 3831. So as discussed in my video last week, expecting new highs for this particular month. Currently a very nice green candlestick, continuation of the rally, and a continuation of this signal right here where we had higher highs moving up towards probably 4,000 on SPX. That's a very nice number to move towards. The uptrend of the SPX on long term still very healthy, still very bullish since 2010. And let's see where this rally will bring us over the next couple of months. On the weekly charts on the SPX, medium term still very bullish, very nice long signal on the 1st of June. Last year, for 7 months going, still on an uptrend above the super trend, and the pivot at 3380, and then 3673 on the short-term pivot. All right, so for those who are holding portfolio positions from June or even last February when you bought the lows, you'll be watching out for 3673 on the medium term if there's any pullback. And in the short term, the daily charts since 5th of November 2020, there was the pre-election rally. Very nice gains for investors who have invested their money just before the Biden win over Trump, and right now sitting on very nice profits. So what you can do is take note of this point here, 3760, for some short-term corrections, or 3720, and the final pivot at 3653. This pivot cannot break on the daily's chart to continue its uptrend towards 4,000, and we'll see what happens as we enter the new trading week. What I do want to discuss with you is the 4-hourly shorter term charts on the S&P 500, and you can see that there are multitudes of signals where traders who want to actually trade in the short term might get whipsawed quite a little bit, and most swing traders, depending on which stocks they are trading, may get whipsawed as the S&P 500 makes new highs. So because we have new highs on the S&P 500, you can expect a lot of volatility, a lot of rebalancing, a lot of sector rotation where people are moving money around. Although the short, medium, and long-term trend of the S&P 500 is extremely bullish, making new highs, you need to be very careful as to what you're trading. So if you're buying the SPX ETFs, for example, the Vanguard, or trading the SPDR ETF, it will be quite difficult for you to trade in a more medium term or long term buying in a position right now, because you can see the volatility is extremely high. You have swings of almost 150 points or 100 points at a time. So short-term traders may want to avoid the S&P 500 or any related ETFs for now, because as the market grinds to new highs, we can expect quite a bit of volatility. So what you can actually do is look for stocks that have been beaten down and still on a long-term uptrend, all right, and go long on those particular stocks so that you have a little bit more leeway to upside targets, all right? So that is something which I want to highlight to you on the shorter term basis. So as a summation of our conclusion for this particular S&P 500 recap, long-term, short-term, medium-term, multiple time frames, the S&P 500 looks very, very bullish, closing at 3831 for last week, all-time highs. And why I actually focus on the S&P 500 is because it shows the state of the US markets, and at the same time, it also affects and impacts the rest of the world. So European markets are now making new highs, are rallying, and all over Asia is rallying as well. So I always use the S&P 500 to gauge sentiment, to gauge how related stocks or related forex pairs or related markets that you guys may be invested in to see the prospects of your return on investment. All right. So do understand that S&P 500 has been rallying for almost 10 years right now. on a monthly basis. And on a midterm basis, the rally has been running since the 1st of June 2020, and on the daily chart since November last year. So do take note of the health of the S&P 500. Do take note that we are making new highs and we are grinding higher. And also do take note that if you do want to trade, you may want to look for more opportunities on stocks on the US market that has more upside, or particular markets like Asia or Europe where stocks are recovering. Your upside and your potential to hold a position might be much easier and easier to manage. All right, guys, so that's a sum up for the SPX. And just watch out for this short-term pivot because on the 4-hourly charts, you can see a short-term pivot at 3751. Watch for that, and also see that the target for the SPX could be 4,000 before we see any major downdrafts. Thanks for watching, and I'll catch you again in the next video.